The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the August 4th. Fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I can make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. If you can't dial in, you can always send me an email, steve@tfnn.com. In that heading, go ahead and put radio show question. Of course, inside the Tiger's Den, any ping will do. So let's go ahead and get rolling here on this fantastic, fabulous Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading up 37 points. 22,063 is the print. S&P is up 3 at 2475. NASDAQ 100 just up a half a point. So it's flat. Russell 2000 up 7. Semis are flat. New York Stock Exchange up 23. NASDAQ Composite up 5. Wilshire up 46. Trannies are the ones leading the charge here. Up 7, nearly 0.8%. Trading up at 92.71. Volatility index back 61 cents, about 6%. Gold is off $11. So the big movers in the markets today would be the currencies and then the hard currencies, gold, silver, the euro, the yen is having a big move out there. U.S. dollar, obviously, because it is a relationship to the euro, the yen, the pound, the Swedish krona, the Swiss franc, and the Canadian loonie out there. That's what makes up that U.S. dollar index. So that's where we're seeing some movement. Leading to the upside dollar-wise, movement-wise, individual stock-wise. That's a lot of Y's in there. It's ANET, Arista Networks, up $29 or 20%. Sage, the old Sage one, Therapeutics, up 13.5% or almost $11. United Therapeutics up 10. Yelp is up 8.50. Weight Watchers up 8 or 24%. GW Pharma, that's up 5.5%. AutoZone in the green zone today, up 6.50. To the downside, it is Applied Opto Electronics, up $28 or 28%. Mercado Libre up $25, nearly 9% to the downside. Teva Pharmaceuticals stepping in there, wanted to get its name in the mix. Now the leader to the downside, off $35 or 7.5% out there. That must mean the IBB is not performing too well today. Of course, I want to take a look at what you want to look at. So get those P's and Q's coming. Where do we start? You know where we should start? We're going to start with, the beginning of the week all the way through earlier this morning, we were looking for, and we always said Friday, today would be the important day, is gold going to break that long-term descending trend line? And the answer is, man, we're sitting right on it. Here's what we do know. It's not exactly like the kind of break that you would write home about or that you would even take home. And so, therefore, we're going to say, nah. It has not broken that descending trend line. It was looking awfully mighty bullish out here for a real intermediate term change in trend. And right now, the best you can call it is you'd say maybe a draw, or you'd say it just simply hasn't broke out, Steve. I think you go with the latter. It just simply hasn't broke out, Steve. Now, that isn't taking a look at the daily or the weekly chart out here. We're going to get a different meaning when we take a look at different chart time frames out here. So not all should be given up as far as the bulls are concerned, I believe. But let's go take a look at what it is that you've got to pay attention to. So let's switch over and let's take a look at gold itself on the daily time frame chart out here. We're going to put one of my favorite charts and yours, and this is now starting to not look so hotsy-totsy. Maybe all is gone for the bulls. That is, unless we see gold close above 1265.30. Now, 1265.30, Stevie's red line. If you close below that, we don't have a price oscillator below zero. That would be a little bit of a saving grace, but it would suggest that price would go ahead and pull back. Now, when we take a look at my chart on the right-hand side, here's the deal. The deal is we don't have any kind of base. We don't have any other kind of real support that you and I could rely upon. Well, we do have our market profile, so we would look to those market profiles to identify levels of support on the pullback or retracements. Those would be because we don't really have anything else to hang our hats on here. So 1265, maybe a little bit of change. A close below that, plus the weekly, no, you haven't broke out, that would actually signal to you and I that gold should continue pulling back even further. Okay, so let's try to figure out where would that pulling back even further take us to. So let's go take a look at the profiles for the 60, 240, daily, and weekly time frame. Now, this may not be so bad. There is a brand new 60-minute profile just came onto the chart as we were coming on the air. The bottom of that profile is 1258.50. The center of the box is 1258.50. It would suggest to you and I that the decline for the day is done with. The top of the box is 1263.10. So you got 1258 to hang your hat on. The top of the weekly is 1255. There's another hang your hat. No, that's the bottom. I apologize. The bottom of the daily. So that certainly could be support. And the bottom of the weekly at 1253. So what you would really need to see to totally shake you out of a long-term trade, and it doesn't look like we would get it today, I would have to say it'd be a close below 1253.80. 1253.80. And so, yeah, it looks like time now. I have not booked my gains. I'm not flat just yet, but you can tell that I am thinking about it. Good gains, no question. Good gains since taking that long position. I think so. Subscribers are in the GLD. I'm in the futures contract. So what I will be doing is I probably will close it out. I'll give the subscribers the best information I can at about 3 o'clock, and let them make the choice. For me, it's probably easier because I can get out and get back in Sunday night sometime. So what we also have to take a look at is really what's going on with regard to the yen as well. If we look at silver, so let's do this in reverse here. Let's go take a look at silver's profile levels, because silver's getting the schnot kicked out of it, so to speak, and that's never a good thing. If we take a look at silver, and maybe this is providing us with a good message from the metal standpoint. It's below daily, 240, and 60-minute. It says silver, if it breaks below this level of 1620, 1567 is the number where it should head to. Steve Rhodes with TFNN. The Dow, it's up, I don't know, again. Day 9. Can it continue? It can. We'll be right back, folks.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Back, folks. So let's just kind of finish off the metals if we can. So this is a chart here that I pay a lot of attention to and look for signals, confirming signals. So what you and I know is as of 118 right now, we've got gold trading below Stevie's red line. Says further retracement is in order. We've identified where that retracement is, or at least where support levels are, and it's not down too much further than where we're at. Doesn't mean it can't be broken, because it can. All support levels can be broken. If you take a look at the center portion of the chart, you're going to take a look at the Japanese yen, September futures contract there. And we can see that prices come down and tested and thus far rejected Stevie's red line. Now, that is actually a bullish signal as we speak. We've been anticipating this test, both for gold as well as the Japanese yen subscribers now. We've been anticipating this. What we were looking for was for price to hold, as it did yesterday inside of the December contract for gold. Now it's below it. A little bit different message. Don't know what the contract close is going to look like. Treasury bills, T-bond futures, that is also a test and rejection out here. So even though right now it's a bearish reversal candle, dark cloud, you know how that goes. That just means you live in Florida, you turn on the weather, they say there's a chance of thunderstorms, a chance of showers today. No kidding. It's a chance of showers every day. And there's always dark clouds that are rolling by. So at this stage here, it makes the call a little bit more difficult. That's why we go ahead and access those market profiles, just to try to understand what other levels of support might be out there. And inside the Japanese yen on the 60-minute time frame, it did form a new profile about 2 hours ago, and 90.29 is the level that is the bottom of that 60-minute area. The daily, interestingly enough, the top of its box is at 0.90 or 90.77, depending on how you have things, or 97 out there. You're trading right now at 90.42, so you're just slightly below that. Well, that's the top. Wait, the top 99.7. We're at 90.42. So we're down around the center of the box. Okay, there we go. Hello, Steve-O. Wake up. Yeah, so I knew that didn't make any sense. That says price could certainly pull back to the 89 area. So what do you do? You protect your profits until you get some type of absolute rejection inside of gold. I'm just not seeing it here in the yen. I'm not seeing it in the gold. We know where support is at. So, and we took a look at platinum during the break there. That is a very strong metal. I think we were going to look at silver. Did we look at silver? Yeah, we did look at silver, but we didn't look at it on Steve. Now, here's the problem. And so it's good to go back and do this. I get busy doing stuff during the morning or what have you. And then what's great about actually doing the show is it forced me to sit down and take a look at, okay, what's transpired thus far, and a wide swath of what has transpired. So in the case of silver, slightly different message than gold, because you see today what we have is Stevie's red line is 1640. Now, Great Panther, which is holding up really well, Mike, this is probably something, if you're in that trade, we'll go take a look at it for you. This is a potential problem for any of these silver miners out here. Because right now today, if silver closes below 1640, we now have the price oscillator, bottom panel, turning down below zero. Kind of sets up this little fish hook, so to speak, out there. It's not good. It's bearish signal. It says that in silver, it was nothing more than a counter trend rally. And now you've got 3 successive lower highs out here inside of silver, and says, hey, you can go make a run back. Your target really becomes either this red dash line at the 1560 type area, all the way back down to the 1520 range, where it had completed an A to B equals CD pattern. So, so if silver is silver the tell on metal or something like that, on gold, I don't know, but it's certainly with regard to the miners, it makes the trade decision a whole lot easier out here with both gold and silver trading the way that they are. As far as GPL, just since we brought it up, where I got to go switch over here, but I'm going to do that. I brought it up, so bring it up. You better finish it off. That is the theory. So give me a second to pull over a chart for that. Here was a Euro chart. I know there was a request for that. Oh, I didn't like an error message that popped up on my screen. But let's take a look at GPL. Although that error message is going to signal to me that we're not seeing where it's trading at today. So hold on a second here. And I'm referring to me, hold on a second here, not you, hold on a second here. But you've got to trade at $1.28. So $1.28. I can put this chart back up on the screen here. Oh, it is. We're okay. So the $1.28, you're okay. $1.26, Mike, and it's going to be a slight problem for you. In the case of GPL, Great Panther Gold, you've got 2 shooting stars in a row. 2 shooting stars, which are the opposite of a hammer candle, telling you that, hey, be careful, top is in. Those are occurring at this big old bearish engulfing for May 24th. You look at all the bearish action and signals you have up here, Mike, between the $1.30, $1.36 type area. Nothing but sellers just hanging out there. They're just hanging out. They're just waiting for the buyers to get up there and boom. Boom! They're just picking them off left and right. Do we really? Put over the other chart here. Yeah, you got 2 shooting stars out there. So yeah, it's a muy grande resistance out there. So I would just say, based on the candlestick signals and what they're telling you up at resistance, it's a pretty significant area. Now, you might have a longer term. You may have been in it for a while, big profit, which is cool. But I can tell you that the short-term signals, well, why are we worried about just the short-term signals? I don't know. What are the weekly signals? This is the end of the week, is it not? So let's go take a look. What is the weekly signal inside of Great Panther out here? And that says if it closes below, 125, you're at 128 right now. That would be, well, again, you've got this narrow range. It's showing us where support is. You're trading just slightly above resistance out here. But the question is, will silver, giving the signs that it is Great Panther going to just simply diverge and say, hey, I don't really care? It's possible. It's just not necessarily likely. Okay, so we've taken care of the metals. There was another question out here, a couple questions, I think. Okay, one was from, let me find it here, from Mystic, the Mystic one. I want to take a look at GILD. I believe that is correct. So that is Gilead, which has been a strong stock out here, gapping down this morning. And let me see, what was the question? The question was, where is it? Where is it? Steve, could you tell me possible entry price for Gilead? Thanks. Okay, so if we go take a look at it, possible entry prices. So with it gapping down this morning, volume behind it, we're on a daily chart, 9 million shares. What I would say, Mystic One, is we'll put on some profile levels, but just simply in taking a look at the chart out here, you want to be gunning for and watching for the June 26th gap to the upside, 28 million shares, 9 million shares today. If this would pull back into that gap, now it's either going to be the top or the bottom of the gap, and so your price range, you're never sure which one. Whoops, your price range, I got it written down as Apogee. No wonder it's messing up there. Let me grab a different, give me a moment here to grab a different tool. And I'll do this as we're going into the breakout there. So the levels we're going to be watching for Gilead, we'll finish this off when we come back from this break, 68.32 to 67.69. I like that 67.69. That could be the spot. Oh, Mystic One. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We're taking a look at Gilead Sciences. This is the daily chart that we're looking at. We identified that because the question is, hey, where's a buy point on this? And knowing that this thing has made a recent top here over the past couple of days, gapping down today with some good volume behind it, this is pulling back. Now, the good news is that this has a nice sign of strength for us to key off of, which is a nice little gap to the upside, nice real wide-ranging bar, and 68.32 to 67.69 is the likely area where this will pull back to. You can see that price, as long as price closes below 73.52 today, that's the bottom of its daily box, and that really becomes the levels to be watching for. So that's all I've really got on Gilead. I had a request earlier, if I forgot to get to it, for Mr. Bill. It was with regard to the euro. So let me put this out here, and this is the weekly chart for the euro. Now, I don't know. This is the futures contract, by the way, that we're taking a look at. What I don't know is where is this thing going to finish the day? Interestingly enough, as we're taking a look at the weekly chart for the year, you can see that it is a doji candle out here. And I had a question that came in and asked if I would take a look at dojis and discuss those. So I didn't plan this because earlier it was actually a little shooting star. It was the opposite of that hammer candle. And what we can see out here is that the last time, now it's a weekly chart you and I are looking at, so this is from back in May of 2016, you had a nice little shooting star candle that formed. They either work or they don't. That shooting star candle, by the way, when that was forming, it was forming right as it was getting into a nice little dark cloud, nice little reversal signal back there. And at this stage here, as we speak, price is still above old resistance, which at this stage here, old resistance is new support until it proves otherwise. That resistance being, in essence, the top of that dark cloud cover candle. I don't have the exact price, but we're in the 117-ish and a little bit of change out here. You've got a doji candle. So the real meaning of a doji candle, I don't know how it's going to end today. Again, weekly chart. Doji candle just is, when a doji candle is at resistance, to me, it has a ton more meaning than any other place on a chart out here. Now, we're not at resistance, but it does tell you that the market is tired. And so you start to look at, hey, what's the daily chart communicating to us? In this case right now, we know that we've got a long-term weekly consolidation. So the question is price going to pull back to the top of that consolidation level or not? The weekly chart, no real other significant reversal signal. On the daily time frame, that is looking at the September contract. If we take a look, Mr. Bill, at the daily, the daily says you've got a price oscillator that has turned down right now. That price oscillator, I don't have that on this chart. Just on the weekly, let me switch this over here. Let me do this. Let me go get the daily. That way we can thoroughly and properly review the September contract, futures contract for the euro. So give me uno momento, por favor, to put that up on the screen out here. So now as that populates, what we're going to see is just says more of a retracement. Now the retracement here would take us down to Stevie's red dashed line, and that's just slightly over the 115 type area. So that would say that and that actually gets us back towards the top of that consolidation box. The consolidation box will go to the weekly chart out here. You can see what that looks like. And we have the consolidation range right at the almost where 117 to about the 116.25 level out here. So it looks to me like this is going to come back and test that area, and we'll do it Sunday night, Monday morning. If it breaks back below into the consolidation, it was a false breakout, and that can set up a move all the way back down to the bottom of the consolidation. But we would take this certainly one step at a time out there. So that's what I'm seeing inside of the euro. Let me see if I know there's other questions out here, and I'll go back to the old doji question. The GDX. So let's go take a look at the GDX on a daily basis out here. Let's put this out on the screen for you. What we're going to see when we pull up the GDX is that you're going to see something that doesn't look very good. Is this the GDX? This GDX daily? Are we trading at 22, 23? Might I have to take that back? Hold on a minute here. Let me make sure that I've got all my data coming through on that. 22.29 is what we're trading at. So that's the weekly. Let me put the daily. Just want to make sure out here. 22.28. It's got the gap down. Why is this not showing that? Man, oh man. Sorry for that pause. There we go. Now we've got it. Well, so the interesting thing as we take a look at this chart for the GDX. So, look, we talked about the shooting star candles, right? If we take a look at the daily, we received a shooting star yesterday. Can be a bearish reversal signal. The cool thing about shooting stars, they either work or they don't. Well, guess what? This one worked. You've gapped to the downside. Another bearish signal out here. So it says we have a further pullback. The problem is trying to figure out where is that pullback on this move out here, a retracement level or a market profile. So let's just come over here. Let's take a look at the GDX market profiles. This says that 2208 is the daily time frame market profile. So that's a level to be focused on. If there was a close below that, that would spell trouble, probably double trouble. Let's go take a look at what the weekly market profiles are saying to us. And the double trouble would take you all the way back down to the bottom out here. Bottom meaning the prior swing point or even lower, and that's in the 21 even Steven to 2071 level out here. So I don't know if it's going to break through the 2208 level. You've got 25 million shares today. Last time it was in this range, it was going up with 63. So that's a cool little positive out here. But it doesn't mean that it can't move lower. And if gold continues to move lower, more likely than not, and silver continues to move lower, more likely than not, the GDX will pull back. Of course, that means you should look at the top 5, top 10 equities. Top 1 being Barrick Gold. See what this is doing today. So this had a slight little gap to the upside on the trading day of July 27. The volume behind that was 18 million. You're back with 7. So it's pulling back into a slight sign of strength with light volume. So that's a little bit of a positive. This could really be an A to B equals CD to upside. And I don't mean to be, I like to have conviction. But I've got to admit, though, there are times when you take a look at a chart and you are uncertain, lack of conviction. And as we speak right now, I got that lack of conviction. I've just got that lack of conviction feeling out there. Never a good one. And but that's the deal. That's the real deal out there. Now back to the question came in. Jamie had written in and asked if I would just help him to understand doji candles and ways to look at them. And so let me do that I can't do that over the course of the next 15 seconds. But let me do that when we come back from the break. And then it looks like we're going to look at the ticker symbol WEAT, which is an ETF for wheat, which is really not great to look at the ETF for what's going on, but instead, what are the futures contracts inside of wheat? That's where you'd really get your information as to what wheat, WEAT, is going to do. Steve Rhodes with TFNN. We'll be right back.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So we're going to take a look at the doji candle out here. And what I've got marked on this chart here, we're going to look at the S&P 500. We can take a look at the daily, weekly, maybe throw it over, take a look at, a couple of other things. But first we have to understand the psychology, the meaning behind the doji candle. And first, a real doji is where you have price open and close at the exact same. I mean, like the exact same level out there. And whether it's on a daily or it's a weekly chart. And so think about that for a moment. If you have price open and close on the same thing, what are buyers and sellers? Just think about it psychologically, not the kind where, you're going to lay on the couch and try to, figure it out. But what does that say about buyers and sellers? What do they feel about that price point? Do they believe that it's a fair price point? They do. Right? So and what it is in a uptrend, or what it is in an uptrend and what it is at resistance are two different things, or should be two different things. At resistance, it also gives you a signal of being ambivalent, of being tired. Think of it as running the race, getting up to your goal, wanting to get beyond your goal now that you got that part in your dreams, but and it just simply has run out of energy. So an example would be, if we take a look at the S&P 500, as we had, and also there's people who misuse that candlestick. There are a lot of people that'll take a look at just a small-bodied candle and call those dojis. Wrong. Sometimes those are going to be a high wave, maybe a little bit of a spinning top. We're not going to totally get into that out here. But you really want to be looking for very little, none, or just a very, very little change in price between the open and the close out here. Now, on this chart, you're seeing examples of doji, and some high wave candles out here. Now, when we take a look at this is the S&P, taking us back to the highs in March of 2017, the highs that were made back then. No reversal signal on the very next trading session, just an inside bar out here, but price did continue to move lower. Now, as price gets all the way back up here, looks like that's the March 1st date out here, we do see a reversal signal. That reversal signal is right here. We've actually talked about it several times today. Here is a shooting star. Looks like the shooting star looks like April 26th. So that is a resistance level. You can see we had several doji. You had 3 of them. One looks like on May Day, May 1st, then May 2nd, and then another one on May 5th, all up here in this resistance zone. Now, the cool thing about a resistance zone, it's telling us the market is tired, maybe trying to recharge its batteries or move lower. Another doji out here on May the 11th. There was a bit of it. So we know where strong resistance is inside of the S&P 500. Once you clear all that resistance, it's just the market communicating to you and I. You got a prior high, a prior swing point, you get a little shooting star, you get a series of doji candles, even a high wave thrown in there, telling you the market is tired. And once price clearly breaks above that level, which it did when the S&P gapped up, it looks like on May the 25th out here, which that gap, by the way, is held as support. You might say, what gap is that? That's this gap right here. You can see gaps are nothing more than breakouts. So it gave you a, hey, I'm done recharging my batteries, continuation. I'm on the way to the upside. A little bit more difficult. There's a little doji candle out here, Jamie, on July 17th in the S&P 500, but we're not in any kind of resistance area. So in the uptrend, basically the way you look at it is if you close above it, just says another continuation type move. You close below it, says the trees are falling off of the trees. The leaves are falling off of the trees out there. Just out of curiosity, where are we on a weekly basis? I don't know the answer. Well, how about that? I didn't know the answer. Now we know the answer. As we speak right now, for the last 2 weeks, we've got 2 doji candles. So the cool thing here is we're not at resistance by any stretch of the imagination. Well, we're not at resistance that you and I can identify on a weekly chart for the S&P 500. There's no left side resistance out here. We're up at highs. In fact, this week in the S&P 500 would be a higher closing high on a weekly basis. May not be on a daily basis, but on a weekly basis, it most certainly would. And this would say if the S&P 500 rests, comes back on Monday, takes off, closes higher for the week, it has recharged its batteries. It just took a 2-week vacation. The end of July, early part of August. Looks to me like it could be coming back to school out here. That blue line, that diagonal, horizontal line on my screen, by the way, that still would be a level of support. And that is in the 10-ish type area out there on any type of a pullback. So it is telling us that it's recharging its batteries. It's tired. But it's not telling us when it's done recharging those batteries what it wants to do. And that's really the S&P 500. And that is some uses for that little doji candle. I hope that helps you out. Now, we had a request from, I believe it was David in the Tiger's Den. David, welcome. I don't recall seeing that sign on, but perhaps it's been there and I'm just simply blind. So welcome. And you want to take a look at WEAT out here. Now, if we just pull up, this is the Tecrium, if I'm pronouncing it correctly, the Tecrium ETF. This is an ETF for allowing you to be a farmer, so to speak. Now, the problem with analyzing this chart here, the ETF, is we could be totally off on just looking at the chart. And the reason is because the underlying instrument inside of WEAT, for those of you that don't know, it is 3 futures contracts, 3 wheat futures contracts, nearly equal in value, nearly equal. December 2017, there's 842 of those contracts inside of this ETF. But there's also 732 contracts for December of 2018. And for March of 2018, there's 691. They're very close in value as we speak, as of yesterday's close out there. So to really take a look at this ETF, you've got to, and now it's a third. My real recommendation is you've got to be paying attention to those contracts out there. So if we start just by taking a look at out of curiosity, and this would take a lot of time, David, a lot of time, more time than to really do it on the show, to do it properly for you. Wheat on its own has come back into a breakout area, the ETF. If we're just going to analyze this thing began breaking out on the trading day of June 29th. Volume behind that in ETF shares were 367,000 shares. Today you've done 68,000 shares as you've pulled back into that area. So it is pulling back on light volume. Is there any kind of A to B equals CD to the downside, any type of bullish reversal signal, anything that you or I can hang our hat on? And the answer is no. There's not even a profile level that you and I can hang our hat on. The only profile level that's open as we speak right now says this moves from 710, where you're trading now, and makes its way down to 686. But I don't know that that is really correct out there, because we've got to look at the actual futures contracts that are inside there. So as an example out here, it's right here. Here's the September contract. That doesn't make any sense to look at that. So let's come up here and let's put up the December contract. I hear the music in the background real quickly. This chart here in an instant says this needs to get down to 472. This says that it's going to pull back. Only 1/3 of the decision, though. We'll try to finish this off when we get back from this break.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. So we were taking a look at the WEAT ETF for David in our Tiger's Den. And And in taking a look at, we were trying to figure out what the futures contracts were doing. So the only futures contract right now, David, unfortunately, I can pull up is going to be the. Let me do this here. Is going to be the December contract for 2017. And again, this is. When we take a look at this, you do have a brand new 4-hour, 240-minute market profile out here, and this has a bullish structure. So in order for this to continue to move higher, which will influence your WEAT signal, you need to see this close above 484. You're at 483 and change right now, but the 482 level. If price closes below that, you're looking at a further pullback into the 472, which is the bottom of the weekly box out here. The signals, as we take a look at this, are either neutral or bearish, suggesting a further pullback out there. But just recognize that in order to really analyze that ETF, you've got to take a look at the underlying instruments that are inside there. So I hope that helps you out. Randy had asked if we could go take a look at the NQ. I was just asking, what are my thoughts in taking a look at the NQ? I'm trying to find that. Where Steve, could you please look at that? Was weak. That was David. Randy came in. Was it just after that? Yeah, Randy. Hi, Steve. What do you make of the NQ action today? Looks weak. Here's what I make of the NQ action. This is the daily chart. So again, I don't know what time frame it is that you're looking at, but if we take a look at this, the daily chart out here, what we're going to see is the following. We're going to see that price for the entire week has been trading in a natural, normal trading range, which is from the low of 58.72.90. Yes, we've seen it trade below that. Has not gotten up to the high, which is the top of this box. We're looking at a TAS market profile, 59.60, and a bit of change out there. What we know is that support is held. It's been tested 1, 2, 3. Really, it's been tested nearly each day this week. So although I can agree with you that it looks weak, if you test support, basically, I mean, it is actually tested that level 4 times, 4 out of the last 2, 4, 6, and you can almost make the case that it's 6 out of 6 times that this level has been tested. Now that just tells you and I, Randy, how important that area of support is. But support is held, and until support fails, then what this says is you're just moving sideways. You're just consolidating, as if you are just packing up, and just like the doji candle we saw inside the S&P 500, it's just resting. So all that the NQ is really doing is resting. It formed a Gartley buy pattern. It has more than achieved outcome number 4. There are only 5 outcomes of every Gartley pattern. Outcome number 5, which is still in play today, is the A to B equals CD to the upside. And that gives you a price projection of 6113.75 at a minimum. So weak, yeah, but weak enough to say it's time to get on the gravy train and sell all you can? Absolutely, positively not. That is not the signal. If anything, I would say, what's the weekly chart actually doing? Let me pull this over. Let's pull this. Let's take a look at it. So the weekly chart out here, again, just showing. So the weekly chart, here's the interesting thing about the weekly chart, Randy, is 2 weeks ago, we're just trading inside the body of that candle. So any close above on a weekly basis, the high from 2 weeks ago, it's just a continuation to move to the upside. So, folks, have a fantastic weekend, fantastic Friday, and we'll see you on Magnificent Monday. Don't forget, go over to the Facebook page of TFNN and get your answer in before 3:30 today. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.